This is Satya Pradyuman of Cirrus Research. I just want to summarize real quickly the latest monthly signals report. This month's title, Style Tilt to Growth, More Likely Quality Growth, Not Innovation Growth. If you look at the Cirrus indicator summary slide here, a few things that jump out. Number one, our asset allocation work continues to lean fixed income. Granted, that rating has been climbing most recently to more favorably towards equities, but still underweight. Two, the size call. Our oscillator remains in the last couple months. It's gone overweight large cap. Some of this we've argued ties back to the profit cycle and the potential slowing of growth. The third is the style overweight and growth. In other words, we've went from a lean value view a few months ago, and we've steadily become more and more growth. A lot of this has to do with the slowdown in the potential in the profit cycle as well. Finally, risk appetites. Probably one of the biggest changes in our work is that the risk measures, they continue to decay. We're now unusually low. Basically a very risk-averse marketplace. And then finally, the crowding and the break-in leadership continues. The level of extreme seen in these leadership baskets are nowhere near where they were back in 20 and 21. Really, this is probably one of the most important points, is that the risk appetites have decayed sharply. Why is this important? It tends to be a contrary signal. Basically, when risk appetites are strung very high, it does imply basically lower expected returns 6-12 months out. When these readings begin to decay sharply, as they have in the last few months, we find that this is a forecast for better markets 6-12 months from now. The problem is, over the next couple of months, do we see these readings get worse before they get better? So it's clearly a period that we're going to have to wait and see, play a little more defense. Clearly, valuation should protect us. What we've learned is that as we come out of this mode, undervalued assets, higher quality assets tend to be the best performing traits in the marketplace. This is one other point I want to make sure we nail down, which is that this oscillator, this upper panel represents the Cirrus style oscillator. When the reading's in the lower rung, it means you're value overweight. When it gets to the upper range, it means you're overweight growth. And what this can show you is that this had meaningfully moved away from growth 2 years ago, started to get into a lean value pretty much most of last year. Then the last few months, 5-6 months, this has started to really come right back into a buy growth. And really, one of the things we want to make sure we underscore here is that this leaning towards growth it feels right, meaning that the rebound in the profit cycle will continue. However, it will continue at a slowing rate. As a result, margins, earnings visibility, these traits of quality are going to matter. And so we think in this environment, as we get to yet another reopening trade, there is rate risk. And as a result, it's quality growth that should work, not innovation growth. There's a lot of that was covered in our quarterly outlook, our quarterly dispatch. Definitely take a look at that for more detailed discussion. In the meantime, though, if you've got any questions, feel free to reach out to us at Cirrus for a follow-up, and definitely feel free to request copies of the report. Thank you.